Hey everyone, welcome to August 21st, 2025 coaching call. This is an important episode because Bitcoin is at a bull bear crossroad. I'm about to share my chart right now. Screen two. Okay. So what you're seeing right now is the amount of information that we had last night, right when yesterday closed around 8 p.m. Eastern Standard Time. So, if you were awake, then I'm actually technically not awake. I get up at 3 a.m., so I'm usually asleep. But this is how you would basically do a snapshot. This is the ideal time to do a snapshot. I do snapshots and daily calls all the time, but what we try to do is we want to come in before we get
I got
swayed by the market prices, and then we look at what everything's going to do. So we have terminology and we have a system, right? So yesterday, right, we had a strong move down, and then we had, we had a pause day. And I said, okay, there was a long signal yesterday, I believe, and I gave the reason why there was a wide double bottom. I planned the trade out based on the system ahead of time. At the same time, right, we have to take in the fact that there's probability and chance on any given trade, even a high quality setup with a lot of factors that we wait and reveal in real time. It still could be a loser because we don't know the future. And the only way that this can happen, where you can get consistently profitable, is that you have to develop a mindset where you think in probabilities over a large sample size. So, currently I'm in a bull bear trade right now. I don't know if it can work. Before the coaching call, I just imagined the worst case scenario and being totally okay with it. I said, okay, what's the worst case scenario that can happen? I can take a loss on this one, and that's not a big deal. I'll recover from it. We have a rule in the channel. We have a fixed percent risk model, and that fixed percent risk model is different than what an investor would dollar cost average. I was working with them because we do work with investors on larger time frames as well. And when we do that, right, we have to give them major turning points. But investors have the same problems that an income producing trader would have too. To me, it's the same issue. It's just, are you going to be with the larger time frame bias? Or are you not? So this zone here, this support zone here, right? If you were doing your daily call based on the system that we teach at PPT, this support zone, we get a sideways up or up bullish call at this point in time with this much data, right? Your support and resistance category is pretty basic, but I teach it on key reference areas, right? There's a key swing low here that doesn't have to touch this moving average, but it did. More importantly, right, we had a launching balance breakout here, right? And it broke above a giant bigger picture. This is a giant balance, right? And then when you break it, right, that is a bigger picture balance breakout structure. At the same time, right, we're open to the fact that maybe Bitcoin could be overextended and this could be AKA a false breakout pattern. But right now I have to take this trade because the system tells me I have to. It's not because I want to. It doesn't feel right to trade counter trend today. Now we don't take, bull bears are automatic longs or shorts, obviously. Bull bear zones are automatic longs, and I have a definition of what a bull bear zone is. But that doesn't mean that I would take it against an all out downtrend day, right? And today's evidence, right, with a relative volume of 70% this late in the day, this is not a bloodbath type day. Now, was it a down day? Obviously it was, and it was a creep down day where you get lower lows, but it doesn't have the volume to sustain. So one of the categories that we look at that are real time categories is sustained momentum. A momentum, right, could either be a reversal or it can be sustained. You have to come in with the pre-market context for a trend day ahead of time. Now, was there a lot of pre-market context for a trend today? No. I mean, other than the fact that you're at a bull bear zone and things can get bullish, but you have to also factor in the context. Now, the way that we arrived here this time at this particular bull bear zone is not necessarily bullish, right? Because we have other categories, right? We have multiple time frame analysis, right? The short-term bias is just who's in control of the last 1 to 4 days, or it could be magnitude of move, like a giant move here that took out a lot of data, right? When you saw this, when it was up here, you could actually sell on strength. That's what real pros do. I wanted one confirmation candle. I was imagining the next day, if it's a bearish engulfing candlestick pattern, which is this candle, notice it took out the entire day and it took out yesterday and the day before. That's a heads up. That's why I gave a portfolio to go all out here. Not all out, I'm sorry, half off, right? I told people to go. I think it was for Bitcoin. We went uh, half off here, then we reloaded all in again here, and then we took half off right around here. Right now, you might say, well, "Why aren't you going to reload again?" Well, the half off point is giving you choices, and it's correct process to take half off at the high extreme of the day. I mean, at the high extreme of this chart, right? Just because I broke this down doesn't mean automatically that we're going to go into price discovery. There's a lot of people that are happy and are taking profits. At the same time, you see this sideways structure? We're building it above this balance. That's great. That's what we needed. What we didn't want is we didn't want this to go up here and then come back and break below this breakout point, because then that produces a false breakout pattern, which is the opposite bigger picture pattern of a breakout pattern, right? Bigger picture patterns are part of our system. They're one of our categories, as along with multiple time frame analysis, support resistance, moving averages, beauty principle, everything that we teach. There's a lot of things. It seems complicated, but it is literally systematized like a computer programmer. And while some of this is artistically open to interpretation to a degree, beauty principle, you have to see it. Some of it is quite quantitatively just measured, right? Are we extended too far from the mean? Then we might revert back to it, right? We haven't been to this 200 moving average in a while, right? The farther we get away from a 200 moving average, the greater the odds for the dog leash category that we're going to get a reversion to the mean. So that was a down category for me today. But support resistance of bull bear bone. Bull bears are extra strength, strong zones. Now, this does not qualify for, in my opinion, for a major support zone. It is a bull bear. Bull bears are smaller than majors, but they're still useful for us as day traders. Now, major zone is like, right, when we came back here and retested this triple bottom, because you had on top of a giant balance that was bigger than this balance at this time, right? And then you have multiple, basically it came down here where the time frame now is bigger. So then you can have the bigger picture bullish bias take in over the intermediate term downtrend, and then you get this. What we're assessing up here is we're taking that same context and we're adding in a thing called leg count, which helps us. We count up legs, and then when it gets to a certain leg count that we've back tested for this particular phase of the market, like maybe 5 to 6 legs up, that gets a bearish reversal category. That also helped me. Those leg count categories have been part of the reasons I've been telling the long-term huddlers to take profits right now, as well as the Bitcoin time cycle, which basically says October is going to be really when it takes off, which makes sense because, fourth quarter is usually bullish. And if we look at historically 180 days after the hack, not 180 days, 18 months after the Bitcoin halving event is when alt season typically happens, right? And 18 months after the last halving event is going to be this October, which is in alignment with Kobe's Bitcoin time cycle chart. Another reason why we took profits, right? Summer doldrums. But that doesn't mean we can't navigate here, right? Now, this is obviously a tough trade. As I was debating what to do on this trade, right, I have different options, right? I have this zone drawn here. It is a bull bear zone. I draw it a different color to remind me that even though it's going to feel wrong to trade there, I have to automatically take it. And I'm getting better at patience. As I was imagining this, part of me was like, Matt, just don't jump in early up here, which, that's when I gave the signal. I said, wait till the back, to the middle to the back of the zone. I always say middle to the back of the zone has the greatest odds of a reaction. And when you had some momentum against you, especially when you saw this little reversal intraday, and the other markets, which is a category, a real-time category, which were bearish, that was against a long, you could say, okay, I'll take it at the back of the zone. That's a little nuance. And I said that to myself, but I when I saw the triple bottom, I couldn't wait. I said, I don't want to miss this. I win it. I'm still in this trade. It doesn't matter. I'm just saying, if you wait for the back of my zones, they have better odds of holding. Now, I drew this little tiny one real time because at this point in time, that was the current low of the day, like when it hit here, right? Now, there was a little bottom building, but I didn't take it, right? When it popped up here, FOMO kicks in. And part of me is like, this is nothing. Relax. I have an abundant mindset. If it comes back down into my yellow zone, I'm going to go long. And I write this stuff out ahead of time because even though I'm writing it out ahead of time with our daily calls and writing it in the channel, which is really awesome, even though you guys aren't writing it in the channel, you should write it out in your notebooks because you'll stick to your plan. So even if you take a loss today, you say, hey man, I followed my plan and the system told me to take it at a bull bear zone. I shouldn't feel bad at all. I should actually congratulate myself for having the balls to follow my system because my system kicks ass. I mean, you guys can see it. It's very hard to execute. That's why I don't have a problem telling the whole world my system. I'll publish it in the newspaper tomorrow and no one will be able to follow it. It's taken me 8 years of really hardcore, no wife, no kids, to really focus on this craft and sacrifice. I mean, I can tell you exactly the day May 2016 is when I 100% said I was going to do this. You know, it's 9 years ago. So I remember when I'm going to do this in 4 months. No, this is it, and it's an ongoing thing. If you ever think your shit doesn't stink and you can't do no wrong, you're going to get destroyed in the markets. The markets are the most humbling, ego busting, uh, reflection tool there is. So you actually have to become like a jujitsu artist with your emotions and your thoughts. But before I even come to the screen to trade and do an analysis, I do a performance morning routine. Now sometimes I improvise it. I do my own thing. When I'm feeling a little off, I go right to that thing. I wrote it out in the channel for you guys, 10 steps. And I'm like, oh, I don't really want to do it today. This sucks. I don't really want to do. I'm like, okay, I'm going to force myself to do it. And then I say, okay, feeling a little better. I have that emotional guidance scale. You should be feeling good, at least contentment. At the minimum of negative feelings, you should be bored. That's it. If you're feeling pessimistic, frustrated, irritated, impatient, overwhelmed, disappointed, if you have doubt, worry, blame, discouragement, anger, revenge, hatred, jealousy, insecurity, guilt, unworthiness, or fear, grief, depression, despair, and powerlessness, that day I'm going down the vibrational scale to the worst emotions ever. You just don't trade. Because discipline isn't just following that fixed percent risk model that I teach, it's 100% coming to this screen with an optimal state of being. So before you do that, don't even do that. Don't think you can just skip to my psychology stuff too and get that going. Oh, that's why I'm not working. No, if you don't have a strategy with an edge, and if you don't have correct risk management, then I don't care. All the psychology in the world is not going to do anything good for you. It really isn't. So that's another thing you got to think about. So yeah, I mean, why is this have somewhat of an edge today, even though it's a little aggressive based on the price action in the other markets? It's because it's technically in my system a bull bear zone. It has to be like at least 3 weeks, right? And this is July 10th, so it's like a month. You know what I mean? So it's it's worthy of it. It's a shot. Now a lot of these guys they'll do the obvious thing, right? And they'll do a little overshoot, stop people out, and then they'll go up. So you have to developing a patience to counter to do a fade setup requires both patience and aggressiveness, right? I had to be patient to at least get good trade location. I wasn't going to do something up here, or at the same time, there is this when this starts moving up and you start to feel that excitement, the old trader might just buy up here. That's crap. Never buy on confirmation. Miss a move. You have to be okay with missing a move. If this thing goes up here and you bought up here and you caught that, I wouldn't be that happy with it. Even though you made a great move. You might say, well, I had to because it's a bull bear zone. Well, this day it didn't work. You know what I mean? They don't always work. You have to get good trade location. You have to fade when it looks scary. This is one of the awesome signals I gave because it was such a wide, right? So wide. And when this came down on low relative volume with this volume spike on a sideways pre-market call, when there's not all these pre-market factors that I listed out in your daily call for a trend, that's has higher odds for sideways action. So I got to fade that. Did it feel right to do it? No. If you just follow the lower time frames, if I just go like on the 5-minute and look at that day, that's going to feel really scary to take that trade here, right? But there's a setup I take for zone fade for a tradable reaction where you have to, in a relatively short amount of time, I have it listed maybe between 30 minutes minimum. If you can move 60% of the daily range in a relatively short amount of time, right? It's going to get short-term exhausted on a day when there's low volume and low pre-market factors for a trend. This whole week, there's been low pre-market factors for a trend. Why? Because we had this down move, right? We had a down move. And then the next day that I went long yesterday, right? It's more rare to get 2 pure trend day downs in a row than it is to get some consolidation, especially when it's going into support. It's not like we just broke this and now we have a fractal balance breakdown that's going to come and test this and now maybe even hit this moving average, right? If we break this fractal balance here, then I'm going to back off because now it's going to be a short-term balance breakdown. That's then, let's just show this fractal. Right? Then this is like a month, and then when it breaks down, then I back off because the larger time frame bias is going to be down now, right? And then what it'll probably do is like I back off, right? You might say, oh, it could do a false breakout here. I'm open to that launching point of directional conviction. But at the same time, I'm also open to this being a balanced breakdown and hitting this 200 moving average. So that's the context that we're in now, right? It hasn't been the easiest, right? A lot of trading is not trading. And you have to be open to, I'm sorry, my dogs are going crazy, guys. Hang on one second. There we go. That didn't work. Told them to stop barking and they stopped barking running up. So I guess right now I just want to open up the floor if anyone has any questions about the system or the current context or anything. The floor is yours.
Hello, Mr. Matthew. Thank you for your time and your effort to describe this strategy. But I think I'm following you from quite bit time now for like 6 months, and it's very good and sophisticated, as I told you. So I need for this strategy to understand it like in points. What is the steps to enter the buy trade? How to put the take profit and stop loss as exit scenario like this. Thank you.
Yep. Yeah, that's a good question. And right, so I'll go to the execution rules and especially for me when I first started, I just what are the setups? I want to know all these things about how to buy or sell. And if we come, this system is actually a multiple time frame top down strategy. So by top down, I'm looking at monthly, weekly, daily, and going down in rank. Okay. And when you do that, you are not going to get swayed by the price action intraday that is counterintuitive. Now, once you have this daily, so basically the system is we you know I know it's been tough to follow, but I'll just reiterate, right? There's the daily call sheet, which I sent you. And what we do is, whenever you're about to sit down at the screen, ideally you want to do it before the next day closes. You start thinking about it. You want to, this sheet basically helps you imagine what the next day is going to be like. Even though it's taking in all these larger frame ideas that investors would love, would like to know about. And that's one of the misnomers about what we do here is that we are not doing some smaller time frame indicator divergence thingy. We're looking up higher and then going down because we want the higher time frame weight on our side because higher time frame patterns represent institutions and institutions move markets and we want to be on that side, right? We don't want to go against all the market players. So what I've done is I've distilled everything down into something that's very simple. Now, in terms of just how we stack the probabilities of our system, there's a template with 12 categories that I give as a basic template. I find that if I give more than 12 to start for folks starting out, it's too much. What I've done right with the 12 is I've added a lot of my things to this probability calculation scale, right? And then you add it up, it gives you what the daily call would be like, is going to be up, sideways down, or down in a sense. And then once you get that, it tells you what your rules are and what you're allowed to do and what you're not supposed to do. So let's say I make a sideways down call. The sideways down rules do not long that day. And what's great about it is that, I would probably that day have a support zone that I drew. And if I just blindly buy every support and blindly short every resistance, that's not a strategy with an edge. So on a sideways down call, I don't even care about that support zone. I'm actually going to anticipate that we'll break it. So I would be holding I would take profits there on my short, and then I would hold a runner, right? I wouldn't necessarily like go long there or get all out, right? And so that's what this system does. It gives you a trade plan before you enter the market, aka before you scan to trade, to do a setup, so that you're not swayed by all these lower time frame price actions because the markets are very counterintuitive. At the same time, the daily call you can add a lot of different categories to it that I've added, especially the about 10 pre-market factors that increase the probabilities for a trend. Notice I said pre-market because it's before the market opens. And then and only then, like for example, if I made an up call versus a sideways call, an up call anticipates up says do not short, but it also says I'm open to momentum setups, not just fade setups on location against the price action. I can actually use the momentum on my side and do a pullback continuation or a bounce breakout or an intraday bounce IBB setup. There's different things that I can do. And in the right context, you can make a lot of money on a pure trend day. I mean, you can hold your core positions more towards the end of the day because there's a stat we use: the 90% of the day trend days end in the last few hours, and trend down days. And then you can reload on the pullbacks, all kinds of things. But more often than not, markets are not they're not trending. More often than not, markets are going to be going sideways because markets are um, an amalgamation of buyers and sellers that have to agree on price. And if they agree on price, they go sideways and they have to transact. And that's the main purpose of markets, is to facilitate trade. And then when it rejects that price level, then we get price discovery. A new value area could be breaking out low or breaking out down. But remember, markets move in a series of thrusts and corrections. So it's never like, oh my God, it's just going to keep going up and up and up. I mean, notice that like all the big players now that are trying to get institutions involved they're trying to pitch it up here. Of course it's going to go up. It's just a horrible time to sell. Everyone was making fun of Peter Schiff because he said, it's a good time to sell Ethereum. He told everyone to sell here, right? And Peter Schiff, people hate on him, but he said it here, right? And I waited for this intermediate term double top here. Boom, boom, a double top as a price pattern. But it's not just a double top in a vacuum. It's in the context of a major 1, 2, 3, 4. That's confluence. When you have multiple touch points, right, that's confluence. This is a huge resistance zone where last time we went up there, sellers drove it all the way down here. Strong zones produce strong moves, right? So it was tough to sell. I'm like, oh, I'm going to be like Peter Schiff. I had some private members kind of like, oh, what does Peter Schiff know? Ha, ha, ha. He told everyone to sell. I'm thinking, you son of a gun, I don't need one more data point to go against my system because my system is telling me to sell. But it was hard for me as a human being to tell people to sell and to take profits on my Ethereum and Sui portfolio and Bitcoin because it didn't feel right, because I was really euphoric then because it's going up. That's the same problem everybody has. Oh my God, what if it keeps going up? Well, so what? I didn't say go all out. I said take half off and move your stop to break even. And then I gave the reload signal here, which, a little risky, but you see this launching point and directional conviction to launch us down there? And you see how it launched us down there, right? And you see how it touched there, and then it launched us up there? That's a really strong support zone. And even though this short-term bias here was bearish, the intermediate term bias was just neutral, and the bigger picture bias was up. And then when it pulled back here, I told everyone to go long again in the portfolio because we also had a huge hook from extremes pattern that showed the downtrend momentum was about to reverse. Hook from extremes is when it touches this little orange line because it goes past 200, minus 200. That says, okay, wow, this thing's a hook from extremes reversal setup. I know it's counter trend because it's going to be trend continuation of the bigger trend. That's why you always have to zoom out and think in multiple time frames. The time frames that I found the most useful, because there's infinite time frames in the market, are bigger picture bias, which is the last 1 to 3 months, intermediate term bias, which is the last 1 to 2 weeks, and short term bias, which is the last 1 to 4 days, and of course the real time category of the intraday bias, which is who's in control of the day. Those are 4 time frames I look at. Excluding the intraday bias, which is its own real-time weight, the other 3 categories that I mentioned will either have time frame alignment or not. Time frame alignment means the intermediate and the short are both bullish or bearish, or the big picture and the intermediate are both bullish or bearish. If they're all neutral or one's bearish, one's bullish, there's no time frame alignment, and you don't have a larger time frame bias edge that day. You see what I'm doing? I'm making the larger time frame bias an amalgamation of 3 giant time frames that have relevance on the day that I'm trading. No one takes it to this level. I'm telling you right now. Unless they're on Wall Street and I talk to them at my fraternity. So that's what we're trying to do. Now, once everything's in place, right, and you have a plan, then you go on the smaller time frames to execute. These see these two this line here is a zone, right? It's an area in between is a reference area. I don't just draw support and resistance levels with lines. That's not sophisticated enough for very complex markets. What I do is I draw zones, which are based on real market structure, two lines that create a general key reference area. Okay. And that is proved very well. And you can see broken resistance becomes support. And then when you use your setup and you have, like, for example, a sideways call, if I make it with the daily call with all the categories, you line it up, then that says I can take a double top or a double bottom. I can go long or short at good trade location. What can't I do on a sideways call? I do not trade breakouts. I don't trade pullback continuations. I do not take momentum setups. That's basically what the rule says. I don't take momentum setups on sideways because it's not going to be momentum day. I would have to use a different edge, which is I'm using trade location. I'm going against the countervailing price. Right now, once you have that plan in place, then I'll use lower time frame stuff to give me an added edge, especially if there's no larger time frame bias, bullish or bearish. If it's neutral, for example, like, the larger time frame bias right now for me is neutral for Bitcoin because the short term is very bearish. Intermediate term is neutral because we've just been going sideways for a month and we could potentially break it, shifting everything down. The big picture bias is still up. So I have three different time frames on three different things. Nothing's aligned. You can either stay out or you can go on a lower time frame and then make that context more important, which in case you would need then an exhaustion setup or a divergence setup to add an extra edge. Now, one thing that I've added with the S&P 500, which I can't do with Bitcoin, is I've added these two indicators, which I absolutely love the most out of any indicator, called the market internals, because it's only for indices, because it shows you what's underneath the hood, and it's one of the only indicators I use. It's not a derivative of price. You see, everyone loves moving averages and all these different things, but really what a moving average is just doing is it's helping you see directionality because it's taking out extremes and outliers. But really, price action says it all. Leg count, they're useful. Moving averages are a category, and we definitely use them like most people do for that particular moving average category of support and resistance. But then for the beauty principle category, we use them differently. That's Kobe's creation, which says, okay, I'm not going to use this. I am going to be aware of the support and resistance factor of moving averages because that's how a lot of folks use them, and it could be a self-fulfilling prophecy. But I'm also going to watch how price behaves around it. That's really what the beauty principle is. It's like, how is there beauty around this moving average or this price level? Is there some kind of harmony? That's a little bit harder to see. That's a harder category for me because that's uniquely his. But beauty principle is important, right? Because you don't want to just think moving average support only, moving average resistance for above it, or if you're not near it, it's sideways. And then the other way we use moving average is reversion to the mean with the dog leash category. So those are three different ways for three different categories, all on your template that we use. And let's see, we're going back here. Let's see. So you can see how these zones, I don't always have to change them every single day, but you can see how, this was a support zone, right? I think I told people not to go long here, just the way price came down. And you can see, though, even though this, it held here, it didn't hold here. When we came back up there last night, which I was, this could be a decent short later on in the night, but a little bit late at night, I didn't want to trade. You can see here shorting this resistance zone, right, was a lower time frame idea. Even though the bull bear is below it, the short-term bias has been so bearish. 1, 2, 3, 4, 5, 6. I mean, this is even the intermediate term bias. It's about a week. You can even say neutral. 1 to 4 weeks would be neutral here, but it's been very down, right? And it's not just time, right? If there's some type of extreme magnitude of move, that could also, you could have a huge giant bounce breakout pattern that's only 1 day, and then that shifts all the time frames up because it breaks structure. So it's magnitude of move, but also length of time too. You got to look at both of those. Right? I mean, here was great because you had length of time, very mature bounce, which increases the odds for a trend, and then you had the momentum break, right? And then you held, build structure, build structure, build structure. We didn't get that selling tail reversal climax. This was November 7th, bigger picture bounce breakout. This was 2024, right? But remember, when I'm looking at this bigger picture bounce breakout, the leg count is lower from the actual starting place, right? When I'm looking at, this bounce breakout, right, the leg count is higher, then that tempers your, oh my God, now we got to just keep going up because we broke a bounce. No, see how the leg count tempers you? Right? When you were up here and there was a double top and you're at an extreme and your leg count's extended, why can't we go sideways and reverse back down and test the bounce breakout pattern? I was talking about that weeks, way ahead of time, and then it's like planning it out, but then you got to execute it. And then you have to have there's this quote from Daisy Duke, who's a champion poker player, and she coaches, world champion poker players have to think in probabilities too, which is very similar to traders. They have to, memorize all the hands. They have to know, that's similar to the market skills to read it, but then they have to have something else that you can't really put a finger on. It's called, I don't know what it is, grit, some kind of fortitude, some kind of, again, in the zone, they can go into the flow state more. They flip the hat around, they flip the switch. And that's the grit to do the right thing, even though it's difficult. And even though you let's say I get pocket queens. Well, statistically, I don't know if that's going to win this hand, but it's going to win a majority of the hands, a majority of the time. So I'm going to go all in on this one, right? I'm going to push I'm going to take, I got to bet. I don't know if I'm going to win. Someone might have whatever, a flush, but I'm going to take these pocket queens and I'm going to, and that's how you have to think. Like, this is a bull bear zone. It's been creeping down all day. I don't want to buy anywhere near the yellow zone, but I've been talking about this ahead of time, thinking about it every day, because I know counterintuitively I don't want to do it in my body when I press the button. That's why everyone thinks trading is so easy. I can't believe how many people think like anyone can just do this without training. And it's like, well, you wouldn't want to go fly an airplane without a lot of training. But everyone can like kind of press a button, and everyone kind of just can't fly a plane. So everyone thinks, well, pressing a button, and then they just, like, 99.9% of people are just consistent losers, right? And then you hear the one story about like these huddlers that make a fortune, and then it ruins their trading and investing psychology for the rest of their life. I mean, there's a guy on the channel who got a 28x on KDA last bull run and put a good chunk of it. So he put like 5 G's on it and got a 28x on his 5 grand. You do the math on that. And he didn't take any profits, and it's below 5 grand. That coin is a shit coin now. And you have to ask yourself, like, why? And then he's also repeating the same thing again. He's he won't take profits on his SWE now. Well, you just did. I'll keep watching. And then he said, well, I don't know why I don't just take profits on SWE. I'm like, yeah, you got it in a lower price than me. Like, why wouldn't you? I don't. It's not a bad thing to take profit, guys. There's going to be other entries. This whole idea that it's going to keep going up and up and up. I'm telling you, that phase of the market happened in such a quick, small amount of time. But because it was such a euphoric thing, I mean, I remember back then, I had injuries that disappeared. I started playing the saxophone every single day, improvising, and I got really good at it again because I was so happy that I was like rich. You know what I mean? Everyone was rich back then, and if that's the only experience you have, that could destroy you for the rest of your life. Like, you only remember that euphoria of during that one phase, and then you say, I can only make money during that steep up 3 week to 2-3 month phase. And no, you can make money in all kinds of markets. You can go, get on that futures and you can short that stuff, right? Or you can, pull out and just watch the huddlers keep holding. I mean, that's another thing we can do. We can sideline. And the quad exit that we teach, right, for our exit strategy is honors the principle of choices. Half off at the portfolio. That's in case, I'm wrong and we get a huge breakout. Now I'm not foaming. Oh my God, we got to get back in. And then I buy horrible trade location, go all back in on that portfolio, and it retraces on me as soon as I do it, right? And you're like, oh my God, the market's out to get me. I can't win. And then when you say that, you have to say, wait a minute. The market's out to get me. I can't win. That's the greatest secret, because this is supposed to be hard. You think this is easy? Like, your greatest source of edge is that you can handle these small losses well. That is it. Like, the best loser wins. Seriously. That is it. You have to, wait, be okay with missing the move, and then take those small losses, because they equal trading success. You don't want to ever widen your stop and keep widening it after you set it initially. And don't think about your entry when you're about to enter after you make your daily call trade plan. Think about your stop first. Like, where would this trade be totally invalidated? And then think about what you can get out of it, your target. Therefore, you're thinking about your risk to reward ratio first. That I'm telling you, if you could filter out all your trades with at least a 1-to-1 reward to risk, you could be very wealthy. This is very hard to do. Everyone's a 2-to-1, 2-to-1, 2-to-1. Yeah, yeah, yeah. Look at me today. I told myself, wait till that back of that yellow zone, and you know, it was hard for me to wait there. So I am now in a trade that may or may not work out, and I have worse trade location than I wanted. So then if it does work out and it turns into a winner, my risk reward ratio is not going to be as good. So, if you can pride yourself on getting great trade location, because I was even imagining like, don't take it anywhere here, which I did, and don't take it anywhere, and here, take it at the back, because then if I take it at the back, then I'm like, wow, I could really push this down a little for my stop. Whereas if I'm taking it at the top of the zone, now my stop is back here. And while still within that 1% risk model, because I set these zones where they're not bigger than 2%, because you don't want to lose more than 2% on any given trade because you cut yourself off that day. It was still difficult to do in real time because if you watch this, you're like, oh man, what if this bounces up here and it moves up here and you see this, right? So there is no perfect in this game. So that's why I draw zones, because I have to give myself some imperfection in this game. There is no perfect to somewhere get in here and make a decision. Otherwise, I could do nothing and by paralysis by analysis. And through fear, I would never press the button. I think that's the opposite. I've encountered less people, like the people that are willing to come and come to the PPT and study what I'm doing every day. They're less likely to have the fear of loss where they don't press the button. There's some traders that they don't lose a lot, but they don't win a lot. They're just like, I just said I missed a good trade. I missed another good trade. I missed another good trade. I said, first and foremost, focus on the trades that you skipped that were mediocre, that saved you money. And then we'll figure out why, when you identify a setup in your system, you psychologically and emotionally can't take it. So that really comes down to not managing the real, like you have to anticipate, oh, I'm going to feel fear again. I already know these things ahead of time. You ever around someone that pushed your buttons, and then before you got into their field again, you're already psychologically preparing yourself. You could put a gold white light shield around you, or you could already imagine the conversation where you're going to say, oh, I already knew you were going to nag me. I'm thinking ahead of time. So you just say something funny. That's what trading is, because you're going to have problems anyway. Just anticipate problems, because these obstacles that you can overcome are opportunities, and one trade really is meaningless in a large sample size. Remember, you're just 10 trades away from being consistently profitable. You're 10 winning trades away from getting that hit rate where you need to do it and pushing up your risk reward a little bit. And that's why patience is these psychological skill sets that we have to work on just as much as our market reading skills are super important, but they have to be in the right sequence. I don't want people to jump ahead and think, man, I'm not profitable just because I have bad psychology. I'm like, nope. You first and foremost, you're probably making some market reading mistakes, and they might be, one of the things I used to do is go on give too much weight to smaller time frame stuff. You get swayed out by the wrong price action. You're on a 5 or 15-minute thing. You see a divergence, and that's the only reason you get in. It's like, well, that's not big enough. And then another thing is too, like those indicators on smaller time frames might actually psych you out, like from following a rule. When I'm fading against, when I'm fading at a bull bear zone, I'm going against what everyone thinks is going to happen. I'm anticipating reversal. I can't see it ahead of time unless I wait for confirmation, and then it's over. You can't take it. So you already have to anticipate that, like, I'm not going to want to feel like in my body, I'm going to take this. And then you say, okay, I have NLP that I've developed that comes up with that coach that I've developed, that inner coach that comes up and can calm down and talk to the inner critic. The inner critic will say, man, I'm dumb. Why did I just take that? That was a dumb trade. And you have to catch that. You will get better at catching this voice. And then the way that you catch it is there it is, welcome it. And if you don't want to welcome it because it feels uncomfortable, welcome the resistance to welcoming. And then simply by observing it, right, you make yourself separate from it. You don't identify with it. Then it doesn't unconsciously lead you to take bad trading behaviors. The reason why you keep making the same mistakes over and over and over again is you haven't made the unconscious conscious. And until you do that, you will keep repeating the same thing over. That's why I've been doing this for 10 years. How the hell am I still taking 5 losses on a downtrend day? What the hell am I doing? I remember this was at a coaching call with one of my other coaches. He said that this was like last summer. He's like, there's a trader that I know that contacted me for coaching. He's been professionally trading. He's like 60 years old. He's been doing it for a long time. He's very good. He's on a huge losing streak that month. He's like, what am I took? Why am I fading against a downtrend? I don't understand. Like, don't think just like this is the one craft where you can't really get laid back. You know, like you can get so good at something where it's completely in a flow. This is where it's like you always be humbled in a sense if you're not on your game. The psychology aspect of it has to be spot on, spot on. And there's a really I don't know if I shared this in the channel, but there was like a bunch of it was the late '90s, and there was a bunch of athletes from different sports, like the world champion boxer, world champion tennis player, and then there was Derek Jeter for baseball. And they're saying, I forget the question, but his answer was like, well, baseball's a very humbling sport. And before he even answered, I'm thinking, yeah, like if you have a 30% hit rate in baseball, you're going to go into the Hall of Fame. But like you're failing 70% of the time. I don't think there's a trader in the room. I couldn't, that could fail 70% of the time psychologically, even if their risk reward ratio was going to make them profitable. Like they held on their winners like sons of guns. Like there are some traders that can have low hit rates, but they have a huge reward to risk ratio. That is tough to do. Most people can't do that. Though there's one famous trader that could, and his name is Marty Schwartz. You can read about him in Market Wizards, but that's just not for us. I mean, are you going to? You're just not going to do it. You're not going to have the balls to do it. So, how do we get our hit rate up a little bit? I'm telling you, if you can get it up to 70%, high 60 to 76%, and get it to close to a 2-to-1, you're in an elite category. Don't think it's just, you hear these people, these girls, like, you have to have 90% hit rate, 90% hit rate. Ask them what their reward to risk ratio is first, because they'll probably have a negative expectancy. There's only one person I've ever met that had a high hit rate and a high reward to risk ratio, and that's Kobe. He's been trading for, since he's 25, and he's late 50s. So that's 30 years. And he also was such a perfectionist that while I'm asleep at night, he'd stay up, and now it has affected his health. He can't even trade anymore because he's had really serious health problems. Because guys, getting 3 hours of sleep at night is going to kill you guys. I don't care. When my body says get up, I get up. I don't even use an alarm clock. Yeah, I miss trades at night, but I want to be alive. So also, like, if you go so hardcore that you're burned out for 6 months and you can't do anything, why is that good either? So I'm just using that example of how, and his car accidents didn't help, but I'm just using that example of how, this isn't just because you get really good at this doesn't mean you can slack off on this. Because this is as important as flying a plane in a sense it's your finances. Almost, almost as important. I don't want to be that dramatic, but yeah, it's important, and money brings up like a lot. Part of the super performance morning routine is money. This is dealing with money. There's really smart, intellectual PhDs that have really maybe bad relationships unconsciously with money because their parents maybe said, "Hey, money's evil, it's dirty," so they might be winning and just like then giving it back to the market because they feel they don't deserve to take that stuff, and that's been something too. So being aware of all these things ahead of time is like you're just a problem solver 101. And even this, right? I had to come in and coach today, but I also gave a signal live at this Bull Bear Zone, and I also had to be like, well, if it loses, I don't want my vibes to go down because I'm coaching. And then I said, well, every single loss, there's never been a time where I had a loss, and I was like, yippee! No one ever feels good on it. But if you can ahead of time say, Jesus, what's the worst that can happen? So I take a small loss. Just imagine that, which is counterintuitive because all the self-help people say, don't imagine the worst, imagine the best. Because trading is counterintuitive, imagine the worst. Because that's the only thing you can't control is your risk. If you can control your risk, like I controlled my risk on this one. I said, well, the only thing I can control is that I'm not going to lose 5% on this. Hell, I'm not going to lose 2% on this trade. I might lose 1.1 or 1.2. That's fine. That's our fixed percent risk model. I'll make it back. That's why we have this fixed percent risk model, because it frees up your mental real estate. What I don't have imposed, like for example, if I was trading for a firm, a firm's money, and we had that fixed percent risk model, they would have control measures within our execution platform such that I couldn't lose more than what I'm supposed to based on that risk model. Even if I go crazy and do revenge trading, like I sometimes have done, it would stop me right away. Boom, 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 boom. And that's great because you're like, what? Afterwards, when you get done revenge trading, you look at the daily chart. I'm like, what the fuck was I doing? That was a downtrend day. What am I doing? That was a horrible day to go long anyway. And that comes from that daily call discipline. So always temper what you're doing on the small time frames by going to that daily chart and imagining what the day is and checking like what the odds are of who's in control of the day. Because the other markets were red today, and because the intraday control for all the markets when I bought here is down, right? The intraday bias is down. It's against. So a lot of things are against. The momentum's against me, even though it's not crazy momentum. And the intraday bias is against me, and so on. So there are things against this trade, right? Now, you might say, well, isn't it always against you when you take a fade location setup? Not necessarily, right? Let's go. I'm gonna show you the difference. Like, buying here on this day, this was a creep down day, so the intraday bias and technically the momentum was lower lows and lower highs was against us. It wasn't extreme momentum. I didn't give the sustained momentum times 2. We can magnify our categories. The yellow zone gets times 2 weight. You see how it gets double that? And where was that setup that I took yesterday? Was it here? No, it was here at 9. We have to go back and look in the channel, but there was a setup yesterday that I took. I think it was here. I think what I did is I went all out around here instead of letting this runner go, and I talked about that. But one thing I didn't do is I didn't short that because I was sideways to up that day, and sideways to up is do not short. Plus there was a V intraday, and we don't like to fade Vs because Vs break up, and the inverse V breaks down. So what was different about this day, like buying here, yes, keep in mind the new day starts here. When I bought here, the intraday bias was against me, right? I mean, because it's down, it's in the lower quadrant of the day, but the momentum is not, because look, it's a sideways day. It started here, went all the way up here. That is a beautiful, way higher setup than I took today. Wide double bottom. Okay, so to Ibrahim, I'm finally answering your question, but I had to do that top down and talk to you about all these higher time frame stuff. But this is how we distill it down into the execution. Yesterday was this wide double bottom. That is the setup for a 15-minute call. So a wide double bottom means, okay, now the low of the day is it, not this little one. We want to see it on the 60-minute chart. Ideally, it's just, yeah, the 60-minute chart can take you away from those 15-minute little double bottoms. We opened here. I'm not saying you had to buy this into this zone. Oh, we're in Ethereum. I'm sorry. Let's go to Bitcoin. Yeah, that's why I was a little off. I bought here. Okay. This is still a wide double bottom, right? And the sustained momentum is not against me. So the intraday bias was against me, but not extreme. And there was no sustained momentum. It was neither for me or against me because it was sideways. Here, we're just down. So the sustained momentum is against me, right? But why did I take it? Well, if you take anything that I say in isolation, it'll never work. But if you take things holistically, then it'll work. Yes, the intraday bias is down and the sustained momentum is down, but the sustained momentum with a relative volume of only 71% is very much below average, and you need volume for sustained momentum typically. I'm not saying we can't creep down or I could be wrong. Like everything I say could be wrong and we'll break down right now and I lose. Even though I'm giving you correct process based on these principles that I write time and time again over and over again and I've published in the channel, you still have to be okay with being wrong. That Michael Jordan misses a jump shot. Is he not a good basketball player? That's how you have to think, right? And this is not something that's intuitive or easily done to think in probabilities, because no human being likes to think way ahead like this. We're traders. We think short term. No, even day traders have to think long term like an investor. It's just that our strategy has to have work every day, right? And when I say do trading work, I don't mean press a button and buy or sell and risk money. That's trading, is not that, right? It's all the stuff that we're doing. It's the psychology in the morning. It's in the market reads. And then it's having the courage to say, you know what? My daily call today is uncertain. There is not enough probability stacked one way. There's not enough probability stacked the other way. In fact, some of the categories, I don't even know how to even give it a score at all. So that category gets uncertain. Then if you have a majority uncertain categories instead of like up or down or sideways or something, then you would just do not trade that day. That's what uncertain is. And that is a great call. I that is the not trading is trading in this one, guys. That's 100% true. So, not trading is trading, right? We don't, oh, I missed this, I buy up here. No, look, you plan ahead of time. I'm going to buy in the yellow zone today because of I said all these different reasons, X, Y, Z, and I zoom out and I show you on the larger time frames why, right? I mean, touch point, touch point, touch point, touch point, launching point, right? I can keep going back in time. I showed you on the daily, but that's confluence, right? It's a zone that that potentially, right? If this downtrend that we've been in since August 13, which has been 8 days, which is an intermediate term downtrend, because it's been a week now, can now touch this, which has been a week before. This could be just some giant intermediate neutral time frame. And now, zooming out, this even bigger picture bias can potentially resume. And if I am right here, this is how I'm thinking in terms of expectancy. Accuracy-based thinking is what your body goes into. Oh my God, is this going to work out? Is it not? Should I take this or should I not? Oh my God, it's Friday. I want to feel good. Hey, I just had a winner. I don't want to take another loss, right? Those are all not your system. Okay. Your system doesn't know whether you took a loss or a win on your last one. If you're really following your system, if you're just revenge trading and you want to make it back and nothing's changed, that's unconscious. Your body's taking it. So in my mind, you have to say, okay, I'm going to take, like, let's say I take a little one at the top. I won't have a huge stop loss. I'll take a little one here. I get stopped out again. I go in. That's a 2R stop, two small losses that equal the bigger one. So you can have two separate trade ideas. It's the same thing as taking one bigger stop, but the mathematics on the second entry will work better. Or you can take, a slightly wider stop, and as long as it's in that fixed percent risk model, you don't have to half your position size, right? So, just the logic, right? So, yes, this momentum was down. Yes, the bias was down. But since we're at the bottom of this awesome yellow zone, with the trade location is another category, and that gets a weight times 2 because it's a major zone. Now, if we were here, why didn't I take it on this double bottom? Good question. Right? Down, leg, down, right? Down was down, momentum was down, high volume that day, I remember, because I told people not to trade, and weak zone. I mean, this isn't a great zone. Yeah, okay, we moved up there, and we moved up there, but we also got a reaction from it here, and we also got a reaction from it there, and we have to remember time bias shift on the short term, right? We had a false breakout pattern out of this giant balance. Typically, when you have a false breakout pattern out of a balance, you go towards the bottom of the balance, right? That means, so part of me was like, I even said it ahead of time. I imagined short traders coming in here after this day and shorting this zone and taking this down and popping it back up. You might say, well, Matt, you imagine that. Why didn't you make money on that? Because I was exhausted that night. If I could have an assistant, I would tell them the setups, and then I'd really have to coach them on, what to do, because like there's this human component too. You might say, well, don't you trust your zones? Couldn't you put a resting order in there? Yeah, but to see this top building here, that's an added edge, especially when we have on the lower time frame here this hook from extremes. Now that setup only works because of the larger time frame context of this false breakout pattern, which is their bigger picture category. Because we know false breakouts will go towards the bottom of this balance, because what will happen is you'll just form a giant trading range. But if this fails, though, this becomes now, with conviction, a full-on balance breakdown pattern, right? But, looking like it might not happen. Today, we got some bottom building. It's worth a shot. That's how you have to think. Because accuracy-based thinking only thinks about whether it's going to be right or wrong now. And expectancy-based thinking thinks, will this trade work out enough? Will this trade work out enough of the time to make me money in the long run? And more importantly, not only what are the odds of this trade? Like, this is against me, that's for me, I added up on it, whatever. But, what can I get out of this thing? Is the risk reward even there? So taking it up here, what was the reward here on this day if this trade worked out against this heavy momentum, right? In this moment in time, a pop back up to the VWAP, and what was the risk? Breaking all this, and then if it does, it goes down here. So why not just wait for the yellow zone and not get smashed all the way down here, so you can have the guts now to take a couple of tries down here and ride this sucker up? You'll also be in a better state to hold for a bigger move. This also, bull bear zones also affect the context of your targets. Now you're going to have farther targets away from here, right? So, that's kind of how you want to see the market. Imagine what you're going to do ahead of time when you're building these zones and get these automatic orders ahead of time. But at the same time, be nimble in your thinking. You have a trade plan, you made your daily call, you're prepped. And prior to that prep, you've done your psychological homework, which should come first. Don't look at the market and then do your performance, mental, psycho, emotional routine. Do that first. And that's because you want to be in that optimal state no matter what, to always look for that abundance so you can have the guts to take different setups um, in the right at the right time when they don't feel right. So, that's what we're looking at the same time, right? Think in terms of scenarios, right? If this doesn't hold here, if this holds, I can get a big move up here. If it doesn't, then it can get a big move down here because it's breaking this balance. Now, granted, it has to break this one last. I should draw one little zone here because this is a launching point of directional conviction. That is another key reference area. But keep in mind, I didn't necessarily draw that right away because I'm going to realize that once we break this fractal zone, this can get bearish. So I might have to back off this one until we see some bottom building, right? That's why I have, these zones here. This is a better one. Obviously, if it breaks down here, anytime you see sideways action, guys, you can always go in here and draw another key reference area. It's not just swing highs and lows and directional points. It's these sideways high volume nodes. So this is like a hidden area of supported resistance. This red line is the VPOC. That's the value point of control. It shows the actual price that within this span of time, buyers and sellers spent the most time at transacting. It's the opposite of seeing directional projection. It's a, price acceptance. So how do I draw a zone around that if I don't draw just lines? I go around not just the VPOC, which is the red line, but the fat node around it. I draw it there. And there. Now, while you're in a VPOC, this zone is essentially meaningless because it's called a running profile because it's ongoing. It really only, this key reference area of support now only becomes relevant because we've moved substantially enough away from it. Once you move substantially enough away from a high volume node that you break from, if this happens to somehow intermediate term break this bounce and we get a bounce breakdown downtrend and it trickles down here, this could be a really good trade. It's a very long balance in time. It's bigger than this balance in time. You know what I mean? So it can overpower it. Obviously, if we break that, this is also an automatic long. So just think about that. Now, as this is coming down, we can, obviously up here, that's when this was, you might say, when were we supposed to go short? When the same bull bear zone that was up here, this was a bull bear zone up here. I mean, when we came back up here, this was the all-time high from July 14th, which was a month. Like it's a month long. Technically, that's a major resistance zone. It's not even a bull bear because, I have some gradients with these time frames: 3 weeks bull bear, 1 to 3 months for a major. It's a month, bull bear month. Either way, this is you could expect that this wasn't just gonna one leg, two, right? So even if you didn't count these as two legs, right? 1, 2, 3, 4 leg. 4 leg counts up to 5, you get a little reaction down 5. Here's the 5th leg. That's definitely sideways to down on that category. We know 5 to 6 legs automatically get sideways down for that category. And that category became really relevant then because of the bigger picture pattern, which is we attempted to break this balance, which was here, and then we came back underneath it. Huge false breakout pattern. Next time we pop into the fib ratio on this trend day when it comes back up, automatic short. I just don't get those because I'm asleep, but I might start trading those after a while because they're very high odds. When you catch a good short, they work out way faster than these long trades because fear is stronger than greed, even in a bull market. I mean, just look at this. The red just seems more prevalent, right? So, and just as a visual, guys, because I know I'm showing you guys a lot of stuff here. Let's see if I can get this. It's going to show you the PPT template for the daily call, but I might not have it with me here. I'll have to bring it next time, right? I know all you guys have it, but just so you know, like all these categories and obviously it's jargon because it's like terminology that we know that so many, as you're getting more familiar with the system, you'll get better at. But it's all in these categories in the system cheat sheet that I give you that is like a computer programmer filling out a scorecard, right? And then that'll give you your setup. Then you think about your stop and target first. That gives you your risk and reward. When you multiply the risk reward times the probability of the accuracy or not, that gives you something called expectancy. That is expectancy based thinking. It's different than, oh, will this trade work out? It's, will this trade work out enough to make me money most of the time? So I know I've kind of repeated some things again, but I'm telling you, repeating this again and again is how you can hone these skills in when you're performing, because that's when you're going to need to call them up. When we're all relaxed and we're sitting whatever, you know what position is on, that's one thing. When you're in the heat of it, when the blood vessels constrict, when the fight or flight kicks in, that's when reptilian mind can take over and you might lose your higher mind. So that's why we always got to reestablish the connection to the higher mind and go into that observer effect to observe it. What's going on with our state? Oh, feeling this. Oh, I'm feeling that. What does this mean? Am I really seeing this clearly? What is the market telling me now? Where is the next positive expectancy trade? It might not be anywhere near you, right? So yeah, as I've systematized the system, the technicals of the system, I've also, certain psychological NLP frameworks, I've systematized that. What I just said before is like what you do when after you've made your plan and you scan, what is the market telling you now? You can just get up and walk away and constantly say that when you sit back down again. Then when you've identified a setup, long or short, and you're like, oh, should I go in? Should I not? Should I go in? Should I not? You feel the adrenaline, you're trying to do it. You've identified a setup. That's accuracy-based thinking. We want to try to reduce that as much as possible. And the more you practice these skills, the more you will. And we reduce that as much as possible by having this NLP for this phase of the whole trading process where you say, just pull the trigger, right? The first phase, you've done your daily call, then you sit down, you're scanning. What is the market telling me now? Where's the next setup? Where's the next positive expectancy to trade? Finally comes there, hour, 2 hours later, you've already planned it out ahead where you were going to do it. Then you say, just pull the trigger, right? All right, what's the next phase? You're in a trade, right? Sometimes you may get out due to fear. That's when you might have to set it and forget it, right? You have to also, monitor it as well, but don't, oh my God, it went up a little bit, went down a little bit. You get out before it resolves. Gives your trades time to work out, okay? And this comes from placing the emphasis on whether this is going to work out or not on you, which can elicit feelings of, regret, shame if you're wrong, or on the flip side, which can even be more dangerous, I can do no wrong, I'm a man, I'm euphoric, whatever. You want to come from that neutral ground where you're not fully expressing your emotions and thoughts to lead to trading behavior, and you're not fully repressing them either, because that will lead to unconscious expressions of your trading behavior. You want to observe them, welcome them, actually welcome them, no matter what. I don't care if it's the weirdest thought you've ever had. The resistance, oh my God, well, okay, I'm not my thoughts, because I am 100% in control of my thoughts. I might be observing some things that I don't like because my emotions are off, but I welcome those emotions. Oh, I'm having those thoughts. I welcome them. Then they lose their seemingly grip. You can also write them down, right? Or just get up and go for a walk around. Get in touch with them. Don't be afraid of the losses. You already coming in anticipating what's the worst that can happen, right? So then the outcome of that event finally happens. You either win or you lose. And regardless of the outcome, when you win or lose, you say, I followed my system, and that's what great traders do, right? Because you could be following your system, win or loss, and you followed correct process. Now, conversely, we're human beings. There's going to be times where we don't follow correct process. We violate rules. We move stops wider, whatever. We take a bad trade because way more things against it. I had a bad read. Be careful of going back and judging every loss as if it was incorrect, because that's hindsight bias. You have to judge yourself with the information that you had then, and that's where the system snapshot really comes into place, because you can fill out your scorecard and say, okay, this is objectively what I should have done, right? But because we're human beings, mistakes are inevitably going to happen. What do you do when there's a mistake? Do you beat yourself up over and over again? Do you want to go punch a wall and never get this? Oh my God, this is insane. I should have done this with my life years ago, because those are all going to come up. Nope, you say, you know that the best traders and the best athletes are incredibly kind to themselves because they're putting in the work every single day. It's not like, Jordan or Bird would have a bad game and then they're like, fuck this. I'm not coming to practice next week and I'm skipping the motherfucking game. No. When Larry Bird lost his first finals after taking that losing team and reversing their losing record to a winning record in his rookie year, when he lost the championship against Magic, his teammates were kind of like, yo, we were a losing team. We went to the championship. We're the best team in the East. Bird said after the game when he lost, and they had like objectively a worse team than Magic's. He didn't have Kareem Abdul-Jabbar. McHale wasn't, I think, even there yet. He said, I got to go back and work on my game. He started to practice the next day. That's me. Is that you? It should be you, because if you want it this bad enough, if you want to quit your job and be consistently profitable, and look at this as a casino where I can come in and file correct process and pull money from the market virtually at will. And that doesn't mean every single day, because there's not a setup every day. There might not be a trade that week. And you have to have courage not to trade that week, for example. And that's okay. But that's what you need to do, right? This process is a holistic trading process. So it's going to have the system that it gives you that I know works, and that I'm executing for the most part live in front of everyone. Not because I just want people to say, you know what, don't learn it for yourself, just follow me, because that's impossible, right? There's people in Europe that are asleep when I'm trading in the morning session. You have to take, there's people that trade markets I don't trade. The principles can be applied to whatever market you trade and whatever time frame you trade, whether you're a day trader, swing trader, position trader, or an investor, or like me, you're all four, because I don't really see a difference between what I'm allocating the capital for has rules, and for what the time frame is, that's fine. They're all based on principles. And what are principles? Principles are simply, and some of them are uniquely developed by us, and most of them are not. But we've stolen from the best. Like, the guy that invented the Japanese candlestick patterns. He's not even a trader. He sells his book, but that's all he does is Japanese candlestick patterns. That's only one of like 20, 30 things we look at the highest level. When you start, you'll have 12, and that'll be fine. And candlestick patterns is one category. But if you only looked at CCI, like one of our categories, or you only looked at the monthly chart or the weekly, which are two other categories, then you're coming in with, this blue car syndrome, which Kobe talked about. It's like, I bought this weird looking blue car that I didn't even know existed, and now I see the same model and the same blue car everywhere. It must mean that this car increased in its frequency in my area. No, that's flawed thinking. Your awareness was open to it. Now you see it more. That's what you do when you like have a new tool and you're obsessed with some indicator and you think you see sells and buys. I had a trader that was a member of our channel that's trying to get into this prop firm. You know how they take people on and whatever. He's took 90 trades in a day. Okay. I get why day traders have a really bad reputation. I don't like that day traders have a really bad reputation. Out of all the time frames, that is the most sophisticated and the best and most safest time frame. At the same time, because there's this day trading mindset where it's just smaller time frame stuff, people are going to see shit that doesn't exist. There is not 90 setups in a month, let alone in a day. That guy is a consistently losing trader. I love the guy to death, and he's not in the channel anymore. But and if I talk to him today, he's still going to take 80 trades in a day. I was shocked when I saw that, right? And on top of it, there's many things. Like I've given this, he's had the system, he's had all the things I still teach him, and yet he still does his lower time frame things, stochastic, Ichimoto stuff. I don't, a lot of people, and it's okay. Everyone's going to have a different background. So the cool thing about the PPT system is that it takes into consideration two different things that are really cool. One is that you're a human being and you're going to have a gut feeling no matter what, even if your gut feeling is always going to be wrong because you're just starting out. Because this is counterintuitive. So what you're feeling as a gut is actually just some fear and stuff and some FOMO, because it's counterintuitive. And you're always going to be, euphoric at the time when you should sell, and you're going to be too fearful at the time you should buy, unless you have a system which manages that. But since the system will take into the fact that you're going to have that impression anyway, we might as well give it a probability so you can not let it influence you. So we have the category for intuition. How do you feel about being long, and how do you feel about being short? So that actually takes into your gut without letting your gut take over, but it still honors it. And the other thing that the system does is that it honors whatever previous training you've had. While you can completely disregard everything you have and start like a tabula rasa, that's fine. Most people can't. So they bring in the MACDs, the stochastics, the RSI, which I only use on the weekly for investor stuff, and they bring in Ichimoto stuff and pivots and all kind anything they can do possibly to make it less technical for them to do. Like the pivots just do support and resistance with those key reference areas. But instead of you doing it, it's just like I click a button, I'm going to make the computer do everything. No, you can find better support and resistance zones than a computer. So, but what I'm trying to say is that it at least will have categories for you to bring in your own stuff. So if you do Ichimotos, you have an Ichimoto category. But because it's a category in a context of much larger things, it's a scale. So it diminishes that confirmation you bias you get in only one category. So a little bit more complex today, but I just wanted to explain, the system, how we find our setups, obviously getting these tools and doing them and incorporating with your own stuff is super important. But, it's getting a little late here, so we're going to wrap up. I just wanted to open the floor up to any questions at all, because that is the end of the market analysis. And it's okay if you don't have any, but I'm just take your time. I'm going to like open the floor for 5 minutes or so people can think about them. But I'm here, no worries, and no
Okay, I
pressure.
have no question. Thank you.
Oh, great, great. Oh, did you have a question or you did not? I'm sorry.
It's me, Ibrahim. No, sorry, I don't have a
Okay, no
question.
worries. It's all good.
Uh,
Hey, Emo, thanks for coming on.
yeah, of course, I do have a question. What was
Sure.
the best trade you ever took?
Uh, like in terms of the most like reward I got on it, or in terms of just like the most stacked process where it was like everything was right and I followed my system correctly. One of the biggest trades I ever got was I got like it was Polkadot last bull run. Um, I think I loaded in at 6 something and got to like 50 something. That was a big win. That doesn't always happen. This year for a swing trade, that one of the biggest ones was Tensor. We got in August at 5, and we got people out at when, trust me, the guys no one wanted to hear me telling people to exit when it was at $57. But that's when I told people, that's you're not going to get much more than 10R. That was crazy. We held that long, reducing risk by position size, but that was a great trade. And, that was one of the best swing trades this year. Day trading wise, there was a recent, like maybe like 4 weeks ago, there was like this short, there was this trading range where every time we went up there, the shorts would just sell. And I felt super confident every time I went up there to just sell. And I think I had like 7 short winners that week. So that was a pretty big week. So yeah, it can be that easy. What you don't want to do is then like do this thing like a give back Friday, right? Where it's like, oh, I'm on a winning streak and now I took my first loss. And then you like, you know what, I want to get that back. No, just walk away. That's why I named it Give Back Friday, just to put it into place. But yeah, there's been some really good position trades this year. SWE has been probably my most profitable portfolio reload. It's been very nice. We got people in at 80 cents and it's gotten as high, I think it's 5 something, but we got people out recently and the recent highs around 4 something and reloaded back into it. Now we're half off as this kind of resolves this area. And, but yeah, I always want to think in terms of an opportunity cycle. And, the summers typically have less opportunity. So that is why, coming up this fall, specifically October, mid-October, with our, PPT Bitcoin time cycle chart, which predicts a pretty big inflection point. Also, that corresponds to the fact that alt season happens about 18 months after the halving event, which will be in October this year. I'm excited for the October opportunity cycle this fall. So hopefully we'll eclipse some of those performances we had in the room. But thank you guys for coming out. Appreciate it. Any questions you guys have, post them in the room. And I may be doing, I also do one-on-ones as well. And there may be, I'll let you guys know if there's some one-on-one. I'm definitely going to do next Friday, but I might do impromptu tomorrow if the markets are kind of quiet. But hopefully, right, we'll get a little bit of a move off here, and sitting through this zone will worth it. But this is a logic behind the system. This is why it works, and implementing it is correctly is a lifelong pursuit. So let's see. All right, Ibrahim, thanks. Yeah, guys, if you guys want to reach out to me on WhatsApp, we can do a business call tomorrow or this weekend. You guys can reach out. But thanks for everyone for coming out, guys. We will see you in the room, and hopefully we'll have more bullish days ahead. Take care, everybody. God bless.